So will a proposal like this turn into policy, and how will this play out for consumers and the stocks? I would think that you see the direction he wants to go to, and companies might be inclined to say, you know what, we're going to concede something in order to move towards that direction without having to get to 10%.
Fair. And I think there's some middle ground. I mean, 10% is probably a little draconian, but yeah, there is a middle ground. But let's try to play it through the lens of the stock market. You know, Capital One sold off today. It makes sense. It's not a valuation concern here, but I think 60 to 65% of their business is tied to exactly that. Where is this thing going to settle? Well, first of all, the unintended consequences, I believe, will be, okay, we'll ratchet back the rate, but then credit lending probably gets ratcheted down to commensurate with that. So I don't think it's going to do what it's intended to do. But I also think this is going to be somewhat short-lived. I think you buy the sell-off in these names just on valuation. The fact that I understand that earnings are backward-looking, but they report on the 22nd, which is fast approaching, and the quarter is going to be pretty good, I think.
Yeah.
Yeah, I agree with you that it seems somewhat overdone. It's a little bit like mini Liberation Day for these names, but I think that the unintended consequences are great. When you think about, all right, if we got a cap of 10, and we know we've had this sort of credit loss, where does that credit loss come from?
Right.
That person's not going to be able to borrow anymore. The people who do pay back will be able to. That's not how these companies make their money. The revolving balances will go down. That's really where the sort of juice of the business is. I get the intent. I don't know how it would actually come to pass without significant legislative involvement. So I do think it's sort of overdone. I don't know what they need to give up yet at the moment. I think let it play out. Clearly, it's a message that could resonate with voters. Whether you can implement that and how quickly, that's something else.
Right.
Yeah, politics versus policy. We see it again and again. We've seen it towards a number of industries over the last just month and a half or so. I mean, the administration is really locked into this affordability issue that they were not taking particularly serious, I don't think, last year, and they seem to be taking it very serious now. Whether they can enact this stuff or not, I'll just say this, though. Man, these other bank CEOs must be very happy that JP Morgan's reporting first, and Jamie Dimon is going to get the first question about this, I think, Wednesday morning. And, you know, if there's anybody...
Tomorrow, yeah.
Tomorrow morning. Well, there you go. Thank you. If there's anybody who can...
Shoot it down?
No, walk the line. I mean, really walk the line from, you know, a political standpoint as it relates to the administration, but also, you know, shareholders, right? I mean, we saw the reaction here today. And then the other point is, like, you know, we were saying this last week, pretty tough setup for banks, the way that they've rallied into these results. So it wasn't going to take much to get investors to kind of hit the sell button.
Yeah, I mean, some of the big banks do have some exposure, but their portfolios are not quite the same portfolios as a Synchrony Financial or Capital One.
Capital One.
Right.
But JP Morgan is the biggest credit card issuer in the United States.
Right.
And so they have a big book, as does Citibank, which I think is bigger relative to them than for JP Morgan's book. So that was why.
Wells, I would imagine, has a pretty big exposure.
And Bank of America as well.
But Julie Beal, though, the moves in MasterCard and Visa seem to be interesting because they're not impacted by a cap, but they could be impacted by overall transaction volumes.
Yeah, I think that's right. The way to think about this is more that what they're really looking for is some kind of a press release that they can claim victory on. It was the same thing when Bill Pulte went after Fair Isaac and the credit bureaus to try to get something. And basically what they got was a nice press release, but nothing economically changed. And I think it will be the same situation here, where you need to give the administration a nice little victory that they can tout when they're, you know, trying to talk about the impact they've had on affordability for the midterms. But I don't think there really needs to be anything that happens. If they really cared about interest rates, they wouldn't have dismantled the CFPB, right? That is the place where there is the more extreme examples of people being taken advantage of, and that's what really needs to be regulated. The interest rates themselves are governed by whether or not you're a good credit. Like, I'm a terrible credit, obviously, and like I should pay a higher interest rate. And it just that's just how it's supposed to work. Trying to intervene and, you know, put an artificial cap on it makes no sense.